difficulties. I'm not going to say who it is, but
let's say who it's not. Let's clear the record.
It's not Ben. It's not Tom. It's not me. Jonathan Hicks is out of town. It's not Natalie. It's not Melissa. It's not Harrison Fish, Harrison Pettigrew, Mo, Ryan.
Any of the accountants.
Matt, the accountants. So you know who you are, and I'm looking at you, and this is great radio for those listening to the podcast form. But we are here. Let's talk SpaceX. IPO coming next week is the goal now. Looking to price on Thursday. First day of trading will be Friday. Big time stuff, folks. Raising $75 billion. Right now looking at a $1.75 trillion valuation. They still want to get it over 1.8.
Yeah, I mean, it continues to walk down just a little bit, but 1.75 trillion would be massive. The last record raise was Saudi Aramco, which was $29 billion in 2019. Thomas, we can't. Are you able to show any of the images?
Oh, Ben just outed the producer.
Oh, wow.
Might or might not be someone named
I don't know.
Thomas.
If turning on the microphones is a bridge too far, I'm not sure that... I don't have the... Okay,
well, nobody's perfect. Certainly not Thomas.
Wow. I think we need to bust him down from junior super producer.
In the interest of transparency, if you had me do anything on that computer, that our computer that produces the podcast has like party lights on it.
Yeah, it's got an NVIDIA chip, as you can see through the cool glass lit up case.
Yeah,
it's the fanciest computer in the office by
so
far.
I wouldn't do much better, but we can't share the graphs. Ben, how would you describe the charts to people?
Yes, the first one is shows how many shares actually get traded within the first year, and so at the IPO day it's 7%. On this one, it's going to be half that. It's going to be 3 or 4% that actually get traded on the first day, and that rises to about 50% after the first year. So with 50% not being traded, so that would be a lot coming to market. That would be $1 trillion of new stock coming to market. 2026, it's not surprising, would be the highest amount of equity issuance in history, and even more than in 2021 when we had all the SPACs. So what's interesting, if you look at 2020 and 2021, was how much there was actually there. I mean, 2026 I thought would be this bar on the bar chart that absolutely dwarfs everything else on it, and it's higher, but it's only higher by like 15% versus 2020.
What's crazy about the 21 thing too, though, is when you think about the SPACs, the scale of each of those individually was minuscule. Yep. Compared to the valuation we're looking at on SpaceX. But there was like 3 or 4 new ones a day. We used to subscribe to a shout out to SPAC Insider just so we could know what was in the hopper.
SPAC Insider.
I barely know her. But they would, like, you'd get an update where it'd be like, oh, there's 4 coming out today. It was crazy.
I mean, it was like DraftKings, Nikola Motors, Rivian, Hims. I mean, you name it. It was every company that could go public through a SPAC did go public. Virgin Galactic.
Which people have been buying a lot of because they think it's SpaceX, and then it dumped this morning like 40%.
That happened too. We talked about it yesterday. Hi-Fi Buys, a Twitter company. When Twitter went public, Hi-Fi Buys, the parent company, traded under TWTR, and that stock went up like 29,000% because people accidentally thought it was Twitter, and now they don't exist at all anymore.
What was Twitter's symbol in the end?
Twitter was TWTR.
Maybe, yeah.
Twitter was TWDR, maybe?
It was something like that, or maybe it was TWT. It was something.
People forget.
It was the Twitter company.
I even forget that Twitter was publicly traded at one point.
Yeah.
But a lot of people do wonder, well, should I buy the IPO? Am I going to miss out? Guys, in the first week, 50% of stocks are above their IPO price. 50% are below. Some of the big ones that went above have been CrowdStrike, 33%, Robinhood, 46%, Rivian, 45%. Some of the big ones that have been down after the first week include Snowflake, down 14, DoorDash, down 17, Facebook, down 17. And then after a month, you're also about half are up, half are down. And then after a year, more down than up.
Yep.
So Facebook was down 31% after a year. Even Rivian that had that great 1 week move was down 67%. But what's fascinating is the volatility. Every single one of these was down double digits from their IPO price at one point in that first year.
Well, I mean,
Facebook
you have to
was
consider
down.
that, for most of those, 2022 was a pretty tough year to have any stock.
No, this is first year in their IPO.
Well, yeah, but all the ones in 21.
Yeah, but like Facebook,
Yeah.
Facebook down 54,
Yeah.
Twitter down 58, Alibaba you mentioned 49.
We talked about that pre-call, yeah. I had a client, this is a great story. His name, I guess I can say it, he is deceased and has been for a decade now, Mr. Seth.
R.I.P. Mr. Seth.
He was that was his last name, which can be confusing, but he was
It sounds like a horse name.
he was the most combative client I ever had. Just
Nice.
he would call me angrily about his taxes, it was a tough relationship to manage. He was I liked him, but he was not nice to me. But he called me the day Alibaba went public, and of course we couldn't get any of the you couldn't get in on it beforehand, but he called me that day. It went up like 50% the first day. I think it IPO'd at like 55, 60, went to 90. And he called me and he told me that he would never forgive me. That he would never forgive me for not being able to buy him Alibaba stock, and that we had missed out on the opportunity of a lifetime. And I think about a year later, it was trading at 60 again. And
Yeah, it was down 30%. It was down 30% from the IPO price, down 4% that first week.
Yeah, and so we we bought him some. He did very well in it. He never mentioned it again, but I knew deep down he had never forgiven me. And then when I left that firm, I actually called him the following Monday to see if he wanted to follow me to the next firm, and he had died. So that's how it goes. Like
That's
a real story.
Quick end to that story. I didn't know where it was going.
I called. His wife picked up, and I was like, hey, it's Mr. Seth. I was just gonna call him, check in. And she was like, well, he died in his sleep over the weekend. I was like, oh, brutal.
Yeah. And then you went and visited the grave, and it said he died not forgiving Tom.
Yeah. So
#, Baba.
That's a real story. Let's get into the data. Let's talk about actual thing. But
Jolt's job openings yesterday been pretty strong.
Really strong. The biggest growth in professional and business services, that was like 700,000 employee increase. Like, it never increases by that much. I mean, it effectively went from like 1 million or about 500,000 to like 1.2 million job openings in professional and business services in a month. I don't think people were all of a sudden releasing new job postings to the tune of almost 1 million in a single month, especially in the professional business services area. They also was a huge increase in the West. Job openings went from 1.4 million to 1.9 million. So of the 700,000 or 800,000 increase in job openings nationally, far more than half of that was on the West Coast. So I don't know what's going on there. I think it's just some very odd data. We already have the April jobs report. We have a lot more news, but it is something that's interesting. And if the Fed was still run by Jerome Powell, I think that he would say, well, we've got a lot of job openings. We have some slack in the labor force, or we have a great jobs market. And we don't have slack in the labor force. We need new employees, and therefore we need to raise rates. But I think under Kevin Warsh, he's going to say, this seems a little weird. I'm not going to make Fed policy and decide interest rates based on a weird April job openings number.
Speaking of Warsh, we'll come back to some other stores, jumping around the agenda a little bit. But Tom, Warsh supposedly moving away from forward guidance, and this is a story from the Financial Times, not from old Nikki Leaks.
Yeah, it seems like the new era is upon us. The article basically says the Fed, under Kevin Warsh, he's going to try and eliminate a lot of things that really go back all the way to the Bernanke era. I mean, you can kind of say that the Bernanke coaching tree was initially Bernanke, became Janet Yellen, became Jay Powell. It's been sort of this lineage where, the thinking about cutting rates language, the forward guidance, the taper tantrum, all these different things where they wouldn't move unless they had signaled that they would move sometime far in the future, often 6 to 8 months in the future, and that Kevin Warsh is going to move away from that he kind of wants to eliminate the dot plot and just be less transparent about what the Fed could do. And we've talked about this a lot over the last couple of years, where the Fed could have a lot more impact if that impact was immediate, as opposed to we're going to plan on raising rates by 25 basis points 4 months from today. You can count it. Well, it's like, all right, well, the market's going to move based on that now, which eliminates the reason for even doing it in 4 months. And we've seen that time and time again, where the more you forecast it, the less uncertainty and therefore the less impact. And we talk about volatility is driven by uncertainty all the time. Well, if you don't know what the Fed's going to do, and the Fed is not going to have language in their statements that says we're moving this way or that way, or we're going to potentially think about being hawkish or dovish, then you are able to have a much stronger impact on the interest rate market, because everyone won't have to scramble immediately. You don't have, I mean, we already see incredible swings on the WIRP, the interpolated rate projections. But if you don't have that, that there's going to be the ability to have a huge impact on the market. Surprise is a major factor in the market. You don't get a lot of surprises. When you do, you see major impact. I mean, think about Dell or Hewlett-Packard Enterprises. The market wasn't expecting those companies to have massive windfalls on AI. If they did, the stock price wouldn't go up 30% in a day. They would already be pricing that in. And so I think that that's kind of the nuance that Kevin Warsh wants to do, which is that, your tools are only as powerful as the impact they have. If I pull out a knife and I'm 30 feet away from you, that's not going to have a lot of impact, but if I do it and I'm 2 feet from you, then you're going to react strongly. And I think that's what Kevin Warsh wants to do with the Fed tools, which is to say he wants them to have a major impact. And you can do more with less if the impact is stronger for each individual move, because you haven't forecasted, if that makes sense.
And we've talked about entrenched views, and even a couple months ago we talked about kind of these shocks to the system that the Fed never seems to anticipate, many of which are relatively easy to anticipate things. And the problem that we've had with kind of groupthink and just general entrenchment, it's part of the angle here is I don't want Ben thinking this is what's going to happen in 6 months, because if he thinks that now, there's no way he'll change his mind in 1 month or 2 or 3 or 4. And by month 5, he's locked in. He can't pivot, or it's a shock not only to the market, but to the committee. And so I'm in favor of whatever gives the Fed the most agility.
Yeah.
And I think this is a move towards that.
It's the anti-Austin Powers scene with the steamroller. When the guy's like 100 yards away with the steamroller.
And it's interesting because Powell actually would say he agrees with you, and therefore we should keep it. Yep. So he loves the qualitative guidance, because you can get a market move and you can get financial policy tightening or loosening without you actually having to do anything. Just by, you can basically manipulate the market by 1 month saying we're thinking about raising rates, and the next month saying we're thinking about raising rates.
Yeah. I'm not going to pull my knife out from 30 feet away.
Right.
I'm just going to make sure hey, dude, I have a knife.
So he likes to, yeah, exactly. So, I mean, he wants to be able to have the impact without actually having to do anything. But I think the mixed signals just become massive, because, I mean, it's fine if you know exactly what you want to do and you're kind of massaging your wording to get the correct market reaction. But clearly what we've seen is there are so many voices and they do not know what they want to do. And so there's a lot of conflict. So it's just a massive ball of confusion that is not helpful for anyone, including the Fed.
Yeah, me jumping out and scaring you is way different from me telling you that at some point I'm going to jump out and scare you.
Better watch
What it does
out.
is it causes anxiety, and it makes you look for the jump. And
Consider that a warning, those in the office listening.
Yeah. No one is safe.
No one's safe. Are tariffs back, Ben?
Yes.
All the way.
So 10% tariff right now, kind of baseline, which, I mean, based on the market reaction, I think was more or less expected. This is part of the replacement of the IEPA tariffs that have been removed. A lot of companies have expected this, so this is not really a surprise. But essentially now they're saying, look, we're very much in favor of human rights, and pretty much every other country in the world is not in favor of human rights, and therefore we are imposing 10% tariffs. So this one is specifically the trade ambassador, Jameson Greer, says this is to address the importation of goods made with forced labor. He says it's unacceptable. We will no longer tolerate this disparity. And so we're going to charge a 10% tariff rate. And so basically every country is affected: Canada, the EU, Mexico, China, the UK, India, Vietnam, Indonesia, India.
China.
All of them. Yes.
I mean, it's kind of a brilliant strategy. It's very much the when did you stop beating your wife thing. Because it's like, oh, you don't like the tariffs? Well, I didn't know you were in favor of slave labor. That's weird. That's weird. It's 2026. You know, I mean, it's, you know, it puts you in a tough spot. If you argue against it, you're like, oh, sorry. You're like, you know, you might as well start eating dogs and horses, you know, if you're just into cruelty to everyone, you know. It's pretty, I mean, you know.
It works.
Let's do it.
Yeah, we can do it. Let's do it.
Yeah.
Trump was on Pod Force 1 this morning. Amazingly, Ben, when you look at this, I mean, this was 2 or 3 hours ago that this was uploaded. 6,000 views.
That's it.
That's it. So it makes me feel better about our 50 listeners.
The thing is, like, people have been like posting about it all morning, but they haven't actually watched it. Clearly.
So
I mean, along those lines, everybody tell your friends. I think we've gotten shadow banned again on YouTube.
Please spread the word if you want.
We had a record breaking 1,000 views in a week like 3 weeks ago, and since then we've been getting 10, 15.
And there's really nowhere else you can go for updates on dead clients and eating horses.
Yeah. Literally nowhere.
Trump talked about the Iran situation. I found his commentary on BB most enlightening. He said he wasn't angry. He was just perturbed with him. So, but on the Iran front, says that Iran has agreed they won't have a nuclear weapon. They don't need boots on the ground. Any major takeaways?
Major takeaways is that there are none. Like, there's no opening in the Strait of Hormuz. He wasn't giving anything. I mean, it was very much kind of a plain vanilla, big talking points speech. At the same time, where there's missiles flying back and forth again, which is just, I mean, when I'm sick of it. I am sick of it.
I mean, Mr. Brightside, if you're a hater and a loser, or both, you might not like this, but tariffs still long and strong. We got a war in the Middle East, and guess what? The shelves are still full, baby. Inflation is still sub 4. So if you've just been rooting for the end of the American empire, I got bad news for you, baby. Still here.
Still here. We're going to make it to 250.
Yeah.
Better believe it. The demise will not occur in the next 4 weeks. All right, we'll wrap it up there. Hope you guys have a great day. We'll be back tomorrow, and we'll probably even have the audio on.